Have you ever wondered why you keep making the same trading mistakes over and over again? As you start your trading journey, one very important habit to cultivate is to have a good trading journal, which is why in this video, I'm going to share with you how you can start a trading journal and use it to effectively improve your trading results. Hi, this is Spencer, founder of Synapse Trading, and today I'm going to share with you the two essential things that you need to take note of when starting your trading journal. The first thing to record is the planning of your new trade. You should already have a trading plan before you even start trading, but before you actually execute the trade, it is good to record down the trade. Why are you taking this trade? Why is this a good trade? What is the strategy behind it? What is the reason, the rationale for you wanting to take this trade? What are the pro factors, the negative factors? Everything should be recorded down. Basically, your whole thought process of your decision making of how you come about to decide whether you want to take this trade or you want to pass on this trade. So all that should be recorded down for future reference. Next is the execution of the trade. What was the reason and analysis of each decision point during the trade? For example, when you're making the entry, why are you entering at this price? Why not wait a little bit later? Why not enter at a better price? Or when you are going to exit the trade, why do you want to take profit? Why not let the trade run further, right? All these things should be recorded down. Basically, why you made every decision along the way. You are going to record the trade. So you're going to record what type of trading style was it. Was it a long-term trade, a medium-term trade, a short-term trade? So that will correspond to whether it's position trading, swing trading, or day trading. And what was the product that you traded, right? Was it a forex, stock option, a derivative? So record down the product and also record down the time frame. Was it on a 5-minute chart, a 1-hour chart, a daily chart, a monthly chart? These are all the standard parameters that should be recorded down in your trading journal. Record down your entry price, stop loss price, and target price. The bare minimum that you need to take for each trade. The entry price is the price that you entered the trade. The stop loss price is the price that you get stopped out, right? So if it's a losing trade, you got stopped out, then you record down the price which you got out. Or if you didn't get stopped out, you also record down the stop loss price, because that is the price that intended for it to be the stop loss. And lastly, the target price will be the price that you choose to take profit at. If you actually stagger your trade, for example, you take half profits at a certain price, or you decide to trail, and shift your stop loss, or different variations of position management, right? Do record it down as well, because all this is useful information to see whether the position management strategy that you are using is actually effective, or maybe it might be too complicated and decreasing the optimal returns that you should be getting. Next, you should also attach a chart of your entry and exit. Ideally, the chart should be labeled with as many things as possible. You want to label other than your entry, exit, you could label where you shift your stop loss, but you could also choose to label your thought process directly on your chart. So for example, if you choose to make your journal sort of chart based, then you could also record down most of the information directly on your chart, and then you save a screenshot of it. It might be easier for you to reference. All you have to do is just look through all the different chart compilations. All the information is already on the chart. This is one way that you can choose to record it. However, it will not allow you to effectively analyze the data, because you record it on Excel spreadsheet, then it's easier if you want to do analytics to review the numbers and your profits. This is like a trade-off, or you can have both, right? But ideally, the bare minimum you should have is to at least have an attached chart, so that when you look at it, the chart, you can remember what this trade was about. Lastly, the most important thing is to record down your emotions throughout the trade. Many traders tend to neglect this aspect because they think that they just want to record the hard data, so they don't really record down how they were feeling or why they made this decision. But trading is actually emotional activity. It's largely psychological, but your emotions still do play a big role. A large part of trading is how well you can effectively manage these emotions. So the first step to understanding or managing the emotions is to be able to record it down. For example, when you were taking this trade, were you feeling fear? Were you afraid that you might miss out the trade? Or feeling greedy? Or were you feeling hopeful or hesitant because maybe you were previously been burned in your last trade. All these emotions are very important because subconsciously they may affect your decision making. The next segment is how to use this data that you have collected from your trading journal to improve your trading results. So my suggestion is that on weekly basis, or if you are say doing day trading, then maybe on a daily basis, right? This really depends on how frequently you are doing your trading to look for areas of improvement. What are some of the things that you should be looking out for? Okay, number one, did you follow your trading plan? So ideally you should have a trading plan before you even start trading, so you can compare like the before and after your trading plan versus your trading journal. How closely do they match up? You deviated from your trading plan. Why did it happen? Right? Was it because of certain emotions, or was it some impulse? So with that, then you need to decide whether it is the plan needs to be improved, right? Or whether it is you who needs to improve so that you can be more disciplined to follow the trading plan. The next level is to go down to each individual trade. For example, for every trade, why was it a winning trade and why was it a losing trade? Just because a trade is a winning trade doesn't necessarily mean that it was a perfect trade or you did everything correctly, because there's an element of chance. Even if you broke all your trading rules and you traded horribly, there's still a chance that you might end up with a winning trade, but that doesn't necessarily reflect your ability to trade, and it doesn't mean that you should replicate this behavior in the future. It's important to not just see the trade as winning trade equals good trade and losing trade equals bad trade, but to understand the underlying reasons for why it was a winning trade and why there was a losing trade. For losing trades, was it due to poor execution or was it due to market conditions? So similar to the idea put forth earlier, just because a trade was a losing trade doesn't necessarily mean that it was a bad trade, because you can do everything perfectly and execute everything according to plan and it could still turn out to be a losing trade, simply because no trading strategy is 100%. Even if your trading strategy is 70%, there's still a 30% chance the trade will be a losing trade even if you did everything correctly. The key thing is to see how closely you follow your plan, whether you execute everything according to your plan. As I said earlier, it's a matter of reviewing everything and seeing whether the plan needs to be improved and changed, or whether it is you who needs to improve your discipline such that you can be less emotional and be able to execute the plan which you have come up with. And that is the key to being a good trader. So to sum up, I've shared with you two main segments. The first was all the things that you need to record in your trading journal. That's how you can create a good trading journal. The second part is how you actually use this information to improve your trading results. So remember that all successful traders, even professionals, they keep a trading journal, and in fact this is quite a standard practice for many of the funds and financial institutions, especially for some that I used to work at. It was a common practice that they want all the traders to have a trading journal so that when you are reviewing it with your manager or your bosses, there's a record, and it actually helps them understand your trading style and your trading decisions on a day-to-day basis. Even if you are trading on your own, it's actually very important to have this trading journal, because you will be able to better understand yourself as well. Only you will be able to figure out your strengths and your weaknesses. So having this trading journal gives you a window into your own trading psyche and allow you to fine-tune your trading strategies and thus improve your trading results. For all new traders out there, do you currently have a trading journal? And for seasoned traders, how useful is a trading journal when you are starting your trading journey? Let me know in the comments below. If you found this video useful, please do like and subscribe and click on the bell notification for future notifications. That's it for this video, and I'll see you at the next one.